Hi, I'm Jeremy Wolf with Fleet Owner here in Columbus, Indiana. We're at Act Research's Market Vital seminar, and I have the opportunity to talk with a few of Act Research's experts about various parts of the freight economy. Today, we have Ken Vieth, Principal and Senior Analyst with Act Research, talking with us today about the Class A truck market. So, Ken, thanks for hopping on with us.
Happy to do it, Jeremy. Good to see you. Glad you could make it to the conference.
Yeah, this is my second one. I think I was. It was August last year. That was my first one. Right. It was bright, windy outside, and now we're inside a really nice office built in the 1950s from the person who had found Cummins.
Yeah, so we're in J. Irwin Miller's office. Yeah, his family was the money behind Plessy Cummins back in the day. So raise a toast to J. Irwin Miller.
It's a historic place and very suitable for talking about Class 8 truck demand. So how's the situation going right now?
So better, I think, is in a nutshell. After 3 years of really grinding, seeing backlogs fall, seeing inventories rise, carriers not making any money, we've finally gotten to the point where maybe the industry is going to see a little bit of an uptick in demand as we move through 26.
That sounds pretty fantastic. What changed? How is it doing better now?
So I think in a nutshell, it was winter storms that started in November, continued through December and into January, that allowed spot rates to move materially higher for the first time. Well, actually moving higher probably for the first time since 2021, but really since about the second quarter of 2022, we had a big drop in spot rates, and then kind of from mid 23 to really December of last year, spot rates were basically moving sideways.
Mm-hmm. Spot rates are doing better. Carriers started to feel better about the market, and so they bought a ton of trucks.
No, they ordered some trucks. So I think it's a process. So we've seen fleets aged over the past few years because carrier profitability has been so bad, and over the last couple of months we've seen about a 25% increase in spot rates. We've seen contract rates, and contract rates typically lag, by about 2 quarters spot rate activity. But really, for the first time in 3 years, we've seen contract rates actually move above the rate of inflation. Not a lot, but we're seeing kind of 5% numbers in contract. We do have an emissions mandate that was confirmed at least by the American Trucking Associations in November, and I think kind of that combination of regulatory clarity, i.e. there will be a regulation on January 1st, 2027 from the EPA for clean truck, and getting this pop in freight rates, which may be temporary, but I think that was enough to get truckers to start placing orders in a fairly big way in December, and still at fairly strong levels in January.
A lot of these carriers probably heard about a truck pre-buy for 2027, and it didn't seem quite as real. And now that we have a little bit of clarity, it seems a little bit more real. I know some of the 2027 regulations for those model year trucks are no longer, but we do have some.
Yeah. So for the EPA's low NOx regulation, and again per the ATA, because we still do not have clarity on this from the EPA, at least not as of yesterday. So. There were really two parts to the regulation. The first part was just the technology to bring NOx down. The second part was an extension of warranty and useful life. As kind of we did the math, that warranty and useful life extension was about 2/3 of the mandate. Again, per the ATA, the EPA's plan is to only have the technology piece of the regulation go into effect at the beginning of 2027.
And those trucks for model year 2027, how long does it take for them to get to carriers when manufacturers start making and selling them?
So with regulation, so the regulation is based on when the engine is manufactured. So where getting a crank put in a block is the designation of whether it can be an old, kind of the old technology engine or the new technology engine. If we go back to, say 2010, and of course demand was dreadful back then for new vehicle demand, but the engine manufacturers made probably about 6 months worth of engines. So you got to mid 2010, and the industry was still building with old technology engines, and in some cases, I think into the middle of the third quarter for certain engines anyway. With demand improving, and I think pre-buy is kind of a stretch because our forecast is still below what we would say would be economically derived levels in 2026. So. The engine manufacturers are probably building as many pre-mandate engines as they can, and if we look back to say EPA 07, the industry was, I would say, generally building pre-mandate engines into the into about February of 2007. So I would expect with demand starting at a very low level this year, and the industry ramping up through the course of this year, it's going to be very difficult to get a huge supply of pre-mandate engines in. So I would assume, sometime by the end of the first quarter of 27, you'll start to get that switch over from old engines to new engines.
And that's when carriers will start to see that price increase.
Yeah, and that's when carriers will start to see that price increase. And I think one of the things that starts to pull down demand, I think there'll be a pocket in demand at the beginning of 27 because I think no matter how much testing the OEMs do, there's nothing like giving a bunch of truck drivers the ability to see how many ways there are to break engines. I shouldn't blame truck drivers because clearly it's the engine's fault. But I think if we go back to EPA 04, EPA 7, or EPA 10, where you did have fairly substantive technology changes, every one of them came with a kind of a break-in period for the technology where there were recalls and kind of technology failures. So I think most truckers don't want to be the beta tester, because if you're trying to deliver a load of freight and in your brand new truck and your new truck doesn't work, it's not a good situation.
Yeah. So Class 8 orders are relatively up. What do we expect for the rest of the year? Is it ever going to get any worse? Was sort of the September, August orders from last year the worst that we'll see for this cycle?
I would think so. So there is an annual order cycle. So typically we see orders really pick up starting around September, October, and that kind of peak orders run through February into March typically. This past year we had kind of no early order season in September, October, November. It was still pretty dismal. So one of our questions is, typically by the time you get to, if not March, especially April, you just get a seasonal decline in orders because, the big fleets have been in the market and placed their orders, and you start to move to smaller segments of the market to come in and carry the industry from, say, kind of April through August. And given that we missed kind of the beginning of the 2026 order season back in kind of that September through November period, will we see some carryover? And I think a lot of that comes down to how freight rates perform from here. And again, we largely see the kind of the level of the surge in freight rates was really in large part driven by weather, but I think the strength of that, the strength of the level of order performance is really indicative of kind of the inelasticity of supply and demand that's developed over the past couple of years, and so our story in the market today is this is 2026 as being more of a supply-driven recovery as opposed to a demand-driven recovery because those key freight-generating sectors of the economy that we usually look to perform and lead the way out, industrial production, manufacturing, housing, are still, kind of flat to down and aren't being, the contributors that they can be.
Okay. One last question for you. We heard last time in August last year that competition for some of the available trucks might be high among carriers, depending on how the freight recovery ramps up, depending on how many trucks manufacturers are able to build in time for when the freight cycle turns up. Are we expecting that anytime soon?
So our forecast for the next couple of years is relatively flat in the 250 to 260,000 unit range for North American Class 8 production tractors and trucks. So the industry last year built 250,000 units, though if you think of the shape of production over the last couple of years, 25 started high and finished low on a build per day basis, and conversely 26 is going to start low and finish high. The challenge, especially after a protracted downturn, is always going to be the supply chain's ability to ramp up, because you can only build trucks as fast as the slowest supplier can make parts. So that's always a challenge in the market. But as we look out beyond the next couple of years, with the capacity takeout we've seen, if we get those freight generating sectors of the economy to pick up with some of the policies that have been put in place that look to constrain driver supply, we could be looking at a golden age of freight rates for the fleets who have been able to survive this protracted downturn. That
sounds pretty exciting. I guess we'll see what happens.
Yeah, from my lips to God's ears, as they say.
Thanks for hopping on with us, Ken.
Happy to, Jeremy.